Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. As we try this video, take number 3. Hopefully, I am broadcasting live because certainly an interesting day and evening. Latest news is that now we are seeing signs of credit issues. And let's see, are we going live here? Oh, memento. All right, so I think that we are live, fortunately. Thanks for bearing with me. This is take number 3 on this video, but looks like we are finally live. So thank you for your patience. Testing out some new features tonight. But anyway, as you see, Texas grid operator warns of defaults as credit crisis develops. Okay, and I can see that I am indeed live now, so that is good. We'll actually make it easier to do some of these videos going forward now that I've figured that out. And anyway, back to our story. Texas energy crisis has morphed from a power grid failure to a humanitarian emergency to a credit crisis as billions of dollars in power bills come due. And according to FT, electricity retailers, municipal utilities, power generation companies were purchasing wholesale energy. Let's cut to the end of that one. Owing a whopping $50 billion. Obviously, that's not really an ideal time for this to be happening. Certainly because we see we're in the midst of really, I think this is safe to call it a bond market crisis at this point. I'll be careful with my language. It seems quite intense to me. We had this spike. I think this is where it got up as high as 1.6% a little bit earlier this afternoon, then came down and geez, this is a half hour ago. It was back up to 156. Here it is at 153. So again, I've read so much in the last couple of hours. I remember seeing some article about someone saying there was something unnatural. And again, this is just my speculation, but I don't know. Wouldn't there have, if there was ever a spot for some intervention, whether the Exchange Stabilization Fund, Plunge Protection Team, or IMF, or whatever you call it, that was certainly unusual. Or I don't know. I mean, since there's a lot of spoofing still going on in the metals markets, and JP Morgan also acknowledged that they spoofed the treasury market. I mean, who the heck knows? A lot of this just trying to report as we are happening here. So to have defaults as a credit crisis develop is not ideal. Obviously, I think some of you out there know my feelings on the Texas energy situation. There was a lot of it, and I'm here in Austin, and there was a lot that felt really Enronish as it was developing, even before I made some late night videos. And there was just something that didn't add up. Again, there was a lot happening quickly. I was looking for power, at one point seeing if there was gas in the state or if I was going to have to make a quick drive to the next closest state. So there was a lot happening, yet every once in a while to get a little internet on my phone. And as I read, I was thinking this sure feels that like some sort of short squeeze is involved. And whatever you want to call it here, ERCOT, that uses JP Morgan as their banker, who just has a habit of popping up in these things, warns that some market participants have yet to post collateral to cover some of the bills. I'm not sure if it shows the actual price increase. Maybe if we can click on this one. I mean, it was some insane jump from like, what is it here? I mean, it went to over 9,000. I don't know what a, kind of hard to tell. I think it was like $18 for is the normal price of a megawatt hour cap. I'm sure there's perhaps someone in the chat room can put the actual numbers, but it went from exponential. I mean, it kind of went like more than GameStop type move in the power markets when the thing was down. And you can see Keenan Ogelman, ERCOT's vice president of commercial operations, said market participants who buy power from them have yet to post collateral as a down payment on energy purchases. And I thought this was interesting. I'm sure you mentioned the first time I was recording this video. It's a new one. Lesson learned. And he said some entities have failed to deliver it. and also says defaults are possible and some have already happened. That's certainly quite a phrase to hear at this particular time, especially given what's happening in the bond market, especially when you hear defaults, especially when you know that these banks are so heavily interconnected that they say they can't let one fail because the rest are going to topple like dominoes, especially because the Fed has to put swap lines to prop this thing up for a year and a half, even before Corona. And then they print 40% of the dollars that are in existence after Corona. And Jerome Powell says he's concerned inflation isn't high enough. And if it goes too low on an average basis, he'll overcompensate for it. All right. Another thing with the credit crisis. That was the phrase I remember being introduced to in 2007, about halfway through the year. It's my first year trading equity options on the American Stock Exchange at the time. And I mean, you gotta remember, excuse me, you don't have to remember, but I remember that, I think that was after the Bear Stearns mortgage funds collapsed in maybe June of 2007. Things were quite rocky by then. And obviously we know how that credit crisis ended. So that's another concerning phrase to hear there. Grid operator on Monday used discretion on settlements, collateral, obligations, and payments. Again, when I left Wall Street, went and studied a lot of marketing, started learning about NLP, neurolinguistic programming, which essentially is basically, the sales training, if you will. But the idea that if you hear two people talk about the same thing and one says, that wasn't my favorite, and there's another guy saying how much it sucked and he hated it. So there's a lot. I think that's what Cliff High's model is based on, also just the value that we emotionally associate to words. And along the lines of me looking at the silver market, thinking that, there's at least the paper silver market was something similar to what I imagine Enron experienced or Bernie Madoff experienced, and looking for the clues or the language or the way people would act shortly before something was happening. I mean, this is it. Is there a chance that somehow they change some rule and prolong it a little bit? Sure. But at least to me, all of the warning signs are going off. I mean, if you have several billions of dollars outstanding, they're using discretion. That sounds like when the government tells you that everything's good as the currency is about to be devalued or collapse the next day. So, we see just earlier this week, it appears the first casualty of the Texas power grid is Just Energy, who warned the financial impact of weather on the company once known could be materially adverse to the company's liquidity and its ability to continue as a going concern. Well, I've been reading this book about how to write more effectively, and they caution against sentences like that and just say, it sounds like these guys are in some real trouble. And I'm not saying that to alarm anyone, because I think most of the people watching this, you're prepared for all this stuff. You knew it was coming, whatever form it comes out in. And anyway, I'm sure you can find plenty of more coverage on that. I'll be looking forward to learning more about it. But especially with what's going on in the bond market, certainly quite noteworthy. And I do believe Matt Carr of QCI Partners, who you've seen a couple times on the show, will be joining me in a little bit to dig back into what's happening in the bond market. So with that said, going to wrap up for now. Thanks as always for being here. Hit the subscribe button and the notification bell. Something tells me there may be a little bit more news in the